Good morning. It is Thursday, April 25th, D-Day. Whatever you want to call it. I mean, just bad news keeps getting worse. We'll talk about Meta. We'll talk about the earnings. We'll talk about GDP. We'll talk about jobless claims. We'll talk about tonight, Google and Microsoft. Just everything. But let's start off with the Qs. Let's talk about yesterday's market. Yesterday's market, bonds rates rose, taking stocks down. Earnings were good, but bonds will still rule. So understand that bond rates will still rule. If we go over here to Seeking Alpha and you just go to market data, I think it has market data. I think bonds are in here. Yep, there you go. Treasury yields. And you can look at this. The one you want to really look at, 10-year and 4.72. And we can chart this one too. So what you want to really look at is, are we on our way up? Yes, we're on our way up. And so the 10-year Treasury has been on its way up. That has been in spite of a pretty good stock market through this year. But as they continue to go towards 5% and we worry about higher for longer, that is going to weigh on this market. And you're seeing that yesterday, just slightly. Look, we had a red candle. We opened up yesterday in the morning at 428 on the Qs. We closed at 426. Not horrible. In the afternoon, we opened up for 426. We closed at 426. It was up by like 10 cents. So we just traded. Look at where the MACD is. Look at where the RSI is down there. And then you go to the weekly chart. And you see we're still positive on the week. We opened this week at 417. Right now, you're trading at 418. So you're up on the week. But it's pre-market. We're down 1.79% on the Qs. That's huge. We talked about how this looks like this. Look at those arrows. So when I post this chart, take a look. It looks similar. Do we still have downward movement? Yes. Do we have confirmation over the 9-day on the weekly? No. So I was very clear in that you've got to be careful. Now, I was buying these for long term, so I'm okay. I'm just looking. There's a lot of downside pressure. So you can take a look. This article shows it at NASDAQ, S&P, Dow futures fall on Metaslide and weak GDP data. The Q's right there. Let's take a look at VOO. Now, one of the things that I pointed out yesterday in the newsletter, and the newsletter is free. If you don't get the newsletter, you should have the newsletter. And this intro here is just, hey, here's my market overview. And I posted a chart of VOO, and I posted a chart of SPY. Why do I like VOO over SPY? Why don't I have SPY in the core portfolio, but I do have VOO? Well, they're both S&P tracking funds, and one's from State Street Advisors, which is SPY, and VOO is from Vanguard. The expense rate is what I want to point out. The expense rate, I had it linked to a Seeking Alpha, but if you go and you look, SPY has a 0.09% expense rate. VOO has a 0.03%. So VOO, if you're buying a tracker, is what you want to buy. If you're trading options, SPY has more options on that. So again, it's just personal preference, but these are the things you can use Seeking Alpha Premium for. Now, when we look at VOO, do we have confirmation on the 4-hour? Yes. Yesterday's afternoon followed just as well as the Qs. But when we go and we look at the weekly, and I don't have things highlighted here, but everything looks very similar as well. We're seeing that just button hook right there, and you're seeing it on the weekly. Now, the weekly, we opened up at 457. So far, we're at 458 right now in pre-market. We've given up all the gains that we had on Monday, Tuesday, and Wednesday. All the gains that we've had, they're completely out. So the algorithm on VOO, by the way, makes you 24% over 24 months, 21 positions. It just got you in at 464. Now, are you upset that you got in at 464, 2 days ago? Well, you're at 458. This isn't one that you want to trade, though. I would tell you want to look for entries on this, and that's where I was looking for an entry. On the weekly, does it make sense to have an entry way down here? Probably not. I mean, you want to wait for a continued upward movement versus buying in the middle of the pullback. But are you going to be hurt? Again, I said it on 420. I said it on 420 when the Qs were at $420. I said we will wind up higher than 420 at the end of the year. That is my hypothesis. That is my thought process. Now, if you want to know why we're weak on this stuff, you can read this article or this article. I would post this. U.S. GDP growth cools markedly in Q1 to its slowest pace in 2 years. It was 1.6%. That's hugely declining. If you want to talk about a soft landing, maybe we're heading into a soft landing because this pushes the likelihood of a rate cut in June up. But I caveat this, PCE, personal consumption, is coming out tomorrow. So the problem is if we have a slower GDP and we have an increase in inflation, that's not good news. It will pace in a cut, but it's not good news for the overall economy. That's essentially what it is. Now let's talk about the big one on the table, Meta. Here is stock market nerd Bradley Freeman. Here's his look at it, Q1 2024. The revenue, better than expected. We can go over to, let's go to Earnings Hub, because that's a great place to look at this stuff. When you get the earnings, they do an AI summary of the earnings. I really, really like this one. Continue with basic. We're not upgrading. I'm not upgrading. Not that I don't like it. I just don't use it enough to justify the upgrade. But here it is. Expected $4.32. Reported 9% beat. Better than expected. Expected on revenue, 36.16. Reported 36.46. Beat. We can look at the entire summary here. Strong start to the year with both product momentum and business for the daily active users. That was huge. Daily active users across Meta apps have grown. Significant growth in the US, particularly on WhatsApp. That's huge. Progress in the AI and metaverse. Negatives, significant investment in scaling new products, particularly AI, before monetization, which historically leads to stock volatility. Now, when we look at Meta, we can look at a post. I'm going to pull it up. It's a little bit, I want to pull up the after hours. And the reason I want to do that is because you will see when Mark Zuckerberg specifically says, yeah, we're not focused on monetization right now. You will see an enormous drop in the stock. And that was right here, right at about 5 o'clock when it started. You saw that just enormous. It continues down as he continued the call. That's the problem. Right now you're trading at 419 and you're not seeing it pick up. It hasn't been hurt. Even with that GDP stuff that came out and the market taking a tumble, this one hasn't been killed. I would tell you that I think any reaction in the market is an overreaction and that this might be a buying opportunity. But I've said it before. The problem that you have is tomorrow's PCE number could come in worse. And if that comes in worse, expect another leg down. But at 418 on this stock, on Meta, if you run this algorithm and you take a look at this one's going to wind up down here at 418. Where's 418? It's below its 200-day. Okay? It's below its 200-day. That is going to be a buying opportunity. Let's look at a weekly on this one. You're quite seeing a little button hook there. Where's 418? 14 is right down here. You just passed your 21-day. You're not even at your 50-day. Again, we go over some of these things. Bradley Freeman, you can read, or Bradley Freeman, yeah. You can read that. We can look at the earnings hub. Gene Munster, midpoint of revenue guidance for June is 1.3 below the street. They're increasing the midpoint of CapEx by 12%. His take, the 1.3% revenue guide down for June is a rounding error. The problem is Meta expectations were for a guide up. They just guided down. In other words, investors are viewing the guidance as 5 to 7% below expectations. Increasing CapEx is a good thing in the AI first world. Highly likely that this is most related to the building of Llama. I don't believe this is related to Reality Labs. That's the problem, is that Wall Street doesn't trust Mark Zuckerberg when he says, I'm going to spend. When he says, I'm going to spend, what the hell? They think, oh, we're going back into the metaverse. Remember, he was spending $10 billion a quarter for a metaverse that 30 people were visiting. That's it. That's it. So you want to take a look at Bradley Gerstner, who is a huge investor in Meta. And what does he say? As investors, we are thrilled Meta is pressing their AI advantage, widening their moat, and building the AI infrastructure for highly sustained growth. This is what great leaders do, drive efficiency and long-term growth by doubling down on AI. This is huge. So what's my suggestion? I don't know that you necessarily wait for 3 days. I think you wait for 1 day. When tomorrow's PCE number comes in, if this starts to pop, I think you get back in. If you can buy this anywhere near $400, right now it's at $420. I probably will buy a little bit more when I get off this podcast. But I bought this at $496. I bought a bunch at $496. Am I worried? No. Am I getting out of it? I don't know. If I need the cash, I might take the loss. I'm not that upset with this one. Do I think that it will get back here? Absolutely, I think it gets back here. So there's your look at Meta. Again, if we take a look at the bond rates, they moved higher based on the jobs report and the GDP. Now let's take a look at. I'm going to close this down. This is a great article. Meta put a shockwave down the collective spine of investors as the company offered up weaker than expected guidance for the coming quarter, but it indicated it would be on an investment cycle for some time as artificial intelligence rages on. While shares may have nosedived some 14% on the back of the double dose of news, Wall Street analysts came to the defense of Mark Zuckerberg-led company. Don't bet against Zuck. This is a great article. This is a fantastic article. And Wall Street defends AI spending. They need to spend. 100% they need to spend. In fact, another one that is coming up, AWS. AWS, this is Amazon. Plans to spend $11 billion on data centers in the... This is another spend from a Mag 7. And that's affecting the stock. You're down 3.41%. Does it mean that you get out of Amazon? No. This means that, look, you had your button hook here. You're heading into earnings, which are next week. I think it's April 30th after the bell. You got a nice gap down here between 168 and 170. I added a bunch of this at, I think, 178, 179. I think you plow through this 188 at some point in time. Now, that 188 line up there, the reason that's up there, it's a previous all-time high in July 2021 that provided resistance in November 2021 and then just provided resistance here at the beginning of April. Now, if they have a great quarter, I believe that this pushes this up. And if we want to look at Amazon in the quant, it's a hold. Wall Street has it as a strong buy. 61 analysts in the last 90 days have looked at it. 45 say strong buy, 14 hold. But again, we kind of take that with a grain of salt. The average price target, 210, 19% above where it is today. If we look at the 90-day revisions, the earnings per share, up. 45 analysts. 45 analysts said up. 1 said down. If we look at revenue, 44 said up. 7 said down. If we go and we look at the... let's see. We're going to go and look at the summary, and then we're going to go and look at Wall Street again. We're going to go and look at because I want to see the price target. Look at how it hugs the price target. Again, you're widening that gap today, down at 170. You're widening that gap. So Amazon, in my mind, a buy. Now, tonight, we have Microsoft. Microsoft was my big buy. I bought this earlier in the week at about 402, wiped out those gains. I bought more at 406, wiped out those gains. We're trading at 397. The algorithm yesterday got you in at 408. It is already in the red. You're trading at 397. I've said this before. If you are able to get this under 400, I think it's a great long-term buy. Is it overvalued? I don't think so. Now, we go and we look at Microsoft here in Seeking Alpha. You can see the quant has it as a hold. It would tell you don't buy it. I would argue If you don't have this in your portfolio, I think you should buy it. Wall Street says it's a strong buy. Let's take a look at Wall Street first. 57 analysts over the last 90 days have analyzed this. 42 have said strong buy. The average price target is $471. As of yesterday's close at 409, that's a 15% upside. You are down 3% again. So you have an even better upside if you get it today, this morning. But again, do you want to buy this morning before earnings? I would say you're kind of rolling the dice for the short term, but I think you're setting yourself up fine for the long term. This company has Copilot. If you don't think that they're going to be one of the first ones to actually monetize their spend in AI, I think they're great. If you didn't see it, Jensen Huang delivered the first Blackwell chip. And by the way, the chip is the size of an effing refrigerator. He delivered it over to OpenAI. And Sam and their other guy, Greg, were standing right beside him. So NVIDIA is delivering that type of technology to OpenAI. What does OpenAI power? Microsoft Copilot. Simple as that. I mean, if you don't think that Copilot's going to provide, if every desk by the end of next year doesn't have Copilot as in a business sense, you are left behind. So in my mind, Copilot, probably one of the biggest things. If you think Satya Nadella does not have this in his mind, like he had cloud in his mind 10 years ago when he took over and he drove all of these Microsoft earnings, we can look at the chart. Look at the chart of Microsoft. I mean, 10 years of Microsoft, 927%. You go back, it wasn't moving. Then all of a sudden he starts on cloud, boom. You've just shot up since 2019. So for 10 years, this damn thing didn't do a thing. And now we're shooting up and it's in that growth territory. So I believe in the CEO. I believe in this stock. I think it's a good one. When we look at the valuation of this and we go into this, it's not that great. But I think they have levers that they can pull that will provide them growth. They just bought Activision Blizzard. They have Xbox. It's rumored that Xbox is going to have another console, or they might move to cloud gaming. I don't know. I mean, all I know is that this is a great company, good products, good management, good earnings, good company. So I like it. And the stock has been on a move. You look at this weekly. Look at that 4 hour, but look at this weekly. If we even go to a monthly on this one, say you just want to buy it every month, continue to buy it. I mean, that's how good this company is. Do I think it's going back to 300? I don't think so. It's at 393 right now. Maybe you get to 350, but that doesn't mean that you don't take the chance that they don't blow it out tonight. I took the chance at 400. I'm fine holding. Now, let's take a look at Google. If we go to Google here, we had a cross up. I think we're in the middle of a cross up. 136. Did you buy it at 136? Because it's at 161 right now. I was pounding the table. Get this under 150. Right now in the pre-market, you're trading at 153. So you're going down from that 161. You're down 5%. The only thing you have to worry about with Google from a product standpoint is there are so many Google engineers who are leaving right now, and they are leaving for AI projects. And so there we go. The market just opened, but they're leaving for AI projects. And do they whittle away at search revenue? Now, it doesn't have to be one company that takes 10, 15% away from Google search. This company, all of their foundation is built on search. So if you think that they're going to get whittled away from search, don't invest in it. But I do think that they have an opportunity at this point to actually make some moves. And I like the management, what the management's doing with some of the culture stuff. I like that. When you look at this PEG ratio, the forward PEG ratio, it looks like it's just trading at the sector median. And everybody says of the Mag 7 or the Great 8, this might be the best opportunity of them all. The valuation is D. Quant has it as a hold. Wall Street has it as a buy. We can take a look at Wall Street. 57 analysts over the last 90 days, 30 of them say strong buy. You have an 8% upside to the average price target. When you look at how this trades with the price target, it's pretty damn close. Again, you have an 8% upside. This one was completely undervalued during this entire time. When you look at the quant, it is the valuation that says no. And look at the quant history. It just moved to a hold. It was a strong buy. It jumped over the buy and went right to a hold. So do you want this one? I think you do. I hold it. I haven't added to it, but I do hold this one. Tomorrow, we have Exxon. By the way, if you take a look at the weekly on this one, it hasn't really started to turn over a little bit, but you can say in the last earnings started to turn over, got to a low. That was in March of 2024, and then it just took off. Again, if you can get this close to 150, I think you're doing okay. Tomorrow, we have a couple of energy stocks reporting. One in the core portfolio, it's Exxon. Exxon at 121. I didn't think it was getting back to 120. I sold this MFer at the end of the year at about 104. I took some profits. I have not gotten back in. This is my fault. I think you'll do fine with this one. This one just continues to move. It moves on the price of oil. And oil for the last quarter was up. That's why you're seeing this move up. Now, the algorithm has you in at 121. It's got to cross up there at the MACD, acceptable level. I mean, the MACD is at the level where it was trading here at 104, and it made that nice 13% move. In the middle of that, no, you didn't get a dividend in the middle of that. We had the golden cross in the middle of that. If you take a look at the weekly, where are we on the weekly? We're still in a strong move up. And I think that 119 has provided significant resistance. That's the all-time high right there. And it's provided resistance, but you still have an upward moving MACD. You still have your RSI a little bit oversold. If we go to Seeking Alpha and we look at XOM right here, we can see in the quant, it's a hold. The valuation is a D. The growth is a D. But revisions B+. You take a look at the Wall Street analysts. They say 7% upside. The price target is 129. 26 analysts have analyzed this over the last 90 days. 11 of them have a hold. That is the biggest one, and it's still a buy on Wall Street, and it's because the price is significantly different. Again, you have a big move from this one. The price target is 129. You're trading at 118. It's actually at 120, I think. 121. In pre-market, it's up. Great dividend. Consistency, A+. This isn't one that you're going to make 10, 15% on, even though you just did in the algorithm. The 4-hour algorithm makes you 15%. Buying and holding this one makes you 44%. So if you want the safety of trading in and out of this, you still make 15%. So it's still a good one. One that I wanted to take a look at, SMCI. This is a good article. Technical analysis of SMCI. His analysis says it hasn't bottomed yet. I don't know that I 100% agree with this one. I've said SMCI in my mind. I think if you can get this under $800, I think you're okay. You're using that 200-day as support. Until you break that 200-day, I don't think that you can say that it hasn't bottomed yet. Now, their earnings are coming out. What's interesting about this technical analysis is the headline's a grabber. Oh my God, I've got to get out of SMCI. I've really got to get out of SMCI. But when you go down here to the conclusion, I want to emphasize the argument in this article is more oriented towards the near term. In the longer term, I share the optimism for the nonlinear growth potential in the AI space and have no doubt that SMCI would be a key player in the space. It is just that in the near term, I don't think the sell-off is over yet, judging both by technical and fundamental signs that I'm seeing. I would argue that he's out of his freaking mind. And I would say that you want this before we get into earnings. Now, I have been wrong. I have been completely wrong on other ones. I am sitting here with a very large position in SMCI, both in my brokerage fund, and I have a buy recently at 1,050, which is significantly down. It's not as big as my brokerage firm, but this one is significantly down. I think we've bounced off of 1,000 a couple of times, and I think we get back to 1,000. This is kind of like, remember, if for the longtime listeners, I was pounding the table that $350 gap was going to be killed. And it kept getting to 300, kept getting knocked down. And I said, hey, at some point in time, we get over that. I think we get back to 1,000 again. And I think this is just somebody taking some profits. We can take this one out of here. remove this segment because you can take a look. The algorithm on this one makes you 548%. The algorithm doesn't have you in on this one. It probably will get you in today. It's down 1.3%. Now the Qs are down, let's see, 1.89. We've come back on the Qs a little bit. It's at 418. But SMCI not down as much, 1.82. There's other ones that are down further. This one has earnings on April 30th. I am continuing to hold this. If we get a buy in the algorithm, I may buy more of this. That's just a dollar cost average at 1,050. I may toss that one out, just take the loss and double down and buy more down at this price so that I can see a bigger win. At this point, it's in a retirement account. I don't care. My gains, I'm playing with house money on this one, completely in house money. Now let's talk about some scans. You guys know I do scans, and what these scans are is these are stocks that are bullish in the 4-hour algorithm. If you want, again, this daily stock pick newsletter, it's completely free. You can sign up for it, and at the end, I put the scans in. There's your earnings. I put all the articles that I talk about during this podcast, and I do any social requests if you want me to. Just request on any of the social platforms, whether it's Spotify when you're listening, whether it's on the newsletter. You can even put a comment that you want me to look at a stock on the newsletter. You can put it in Facebook. You can put it on X or Twitter, Vaz, Vesa, Tomato, whatever it is. But these scans are probably the biggest thing that if I, as an investor or a trader, wanted to look at, that's what I would look at. Now, I don't provide all the charts. If you want me to provide a chart, just ask me to provide a chart. But these are stocks that show a bullish tendency in the 4-hour algorithm in Trendspider. Now, you say, well, what's that 4-hour algorithm? Well, if you want my 4-hour algorithm, you can get it in Trendspider. You can go to my link tree, which is linked down below, and you can, which is right here, and it's the top one, Trendspider, right here. Right now, Trendspider is having a sale. It is $1,000 off. You save $1,000. It's $58 per month. You're saving $1,000. That is a great, great offer. $58, and if you can't afford $58 a month for this one, then go get yourself a charting program and just look at find yourself a 4-hour or look at those stocks that I provide free in the newsletter. Look at their charts. Now, one that is a big one, Apple. This is my biggest and largest portfolio. You want to talk about one that's bucking the trend? It's up today. It's in the green. It's up 0.52. Yes, they have earnings coming out. These earnings are going to be a shit show. Honest to God, they're going to be crappy. But that's priced into the market. Remember, whether your grandmother is making turkey or meatloaf for Thanksgiving or Christmas, it's already priced in the market. So all of the news stories you hear about Apple doing poorly, it's priced in the market. Doesn't mean that it won't move on those earnings because the details matter. But if you want to trade Apple and you feel like, oh my God, I've just got to do this, trade this for 2 years on my 4-hour algorithm. You know what? 34 positions. It's about 2 a month, maybe 1.5 positions a month. And the reason is because it's been so volatile lately. You can see it up and down. See all those white entries? You can get this in Trendspider. This is all yours. 168.95 is the entry today. Now, what are the results? We backtest results. We don't just throw crap out there on the wall and say buy here or sell here. We backtest. Backtest has it doesn't predict future performance, but you can tell what this stock has done if you know charting, and if you know charts, they typically have patterns. Now, in the algorithm, those 34 positions, your average win 9.9%. You make over 2 years 14.8%. If you bought and held this stock for 2 years, you made 6.3%. Why not take the 4-hour algorithm? I would argue that anything under 170 on Apple, I think you're getting a deal. Now, that doesn't mean that these earnings don't come out and you don't trade down on 150. That means that 2-3 years from now, that $160 position, $165 position, I think you're up on. I think, again, we are higher at the end of the year than we are right now. I think there's still good news in this market. We can talk about Tesla. Tesla yesterday had a cross up. This one is in the green as well. It's not in the green a lot, but we had a cross up. I would argue with this one, you want to be careful. I think this was hype. I wouldn't buy this right after their earnings. 168 It's because $160.80. That's the buy. And at this support level, 161.56 right there, if we move to the weekly, you're seeing this support level right here at 101 is where I said, hey, this is the ultimate support right here. I do think that we got this oversold bounce, that 161 that you're seeing on the 4-hour. That is because I think there was a Trendspider chart on the daily that provided that support level right there. Well, we'll take a look at it. But Tesla, yeah, again, I would argue, it's not great. You have a buy on the Qs. Now, we talked about the buy on the Qs is because we had a couple of strong days. I do think we have some major issues in the market. You're seeing we broke down 426. Now, the algorithm makes you 19% over 2 years. Buying and holding makes you 33%. I would argue you don't trade the Qs, you buy and hold the Qs. This isn't something you want to trade. Microsoft, right before earnings, we talked about it. The algorithm got you in here at 408. It got you in it right there. 408. It got you in it. It's the 391 right now. Algorithm makes you 22%. Buying and holding makes you 49%. So again, you want to take a look at these scans. If you like the quant, so you want to look at fundamentals. Fundamental charting is not your thing. You want the quant, and the quant has a fantastic performance. If you want to take a look, the quant ratings beats the market. If you want to take a look at that, Seeking Alpha strong buy recommendations versus the S&P. Strong buy, total return $233,000. This is a $10,000 portfolio. Yeah. This is over looks like 10 years, 14 years. This is a great article. I mean, this is the brains behind this is Steve Kress. I did an interview with him from Kress Capital. He did this and return over the S&P 500, 184,000. The strong buy. Again, it's an average annualized return on the strong buy quant. It's 25%. The quant is just really good. So take your favorite stock. Let's take SMCI. What does the quant say about SMCI? Well, it's a strong buy. And it's been a strong buy. This has been a strong buy for a very long time. A couple of times it got to hold. You can see this every day they change the quant. Every day they change the quant. They do adjust it. They basically take a look at the quant score. Its evaluation, growth, profitability, momentum. Let's see. EPS revisions. That's the quant rating. And you can take a look at any stock that you want. This is Seeking Alpha Premium. If you go to my link tree and click on this second one, you get $50 off that. It's $189. Now, say you're even less likely to want to do even that. There's a third one, Alpha Picks. Alpha Picks, since July 1st, 2022, it's up 130%. Now, this is 2 data-driven stocks per month. So you get one on the 1st, you get one on the 15th. They tell you when to buy. They also tell you when to sell. It's a managed portfolio. You have to manage it. They don't manage it for you. You have to manage it. But what you get is this great, great opportunity to look at masters in action and all of this analysis. You get access to the portfolio on day one. So you can pick it. Now, what they say, I don't know how to use this. How can new subscribers get going with Alpha Picks? It's already run. Well, no, they say buy 5 of them. Just buy 5 of them. Buy the entire portfolio. You can split it up. Say you've got, $5,000. Just split it up. It's like 20 stocks. Just split it up. You can buy it. Use the Alpha Picks as an idea generation. So say you like it. One that I found, the most recent one, GCT, Giga Cloud Technology. GTC, I think. GTC. Yeah. Is it GC? No. GCT. I think it's Giga Cloud. There it is. It's my autocorrect that's messing it up. GCT. This is a great one. I mean, this one's down 3% at 34. They got you in. If we go and look at the chart, this is how I use my tools together. I use this and I pointed out, hey, this is the most recent buy in Alpha Picks right here. It was at $30. Bought it at I think I got in at like 31. It's at 34 now. It's a nice 10% gain. You're seeing a little turnover. These are long-term buy and holds. Now it right here, does it automatically tell you that yes, it's going to go up? No. Not every one of these Alpha Picks goes up. but it's a long-term hold. They do deep analysis of this, and they go into it, and you can read it. So again, those are the 3 tools that I have, all on Linktree. The link is down below on the video, linktr.ee/dailystockpick. If you have any questions, hit me up. I will talk to you tomorrow, because tomorrow is PCE day, and that's going to move the market. Plus, we get to see, do I make my my Meta money back on Microsoft? I mean, God, I've doubled down on Microsoft. I've got a ton of Microsoft. It's now at $390. This is down 4%, $390. The Meta stuff with spending, this is just getting, again, it's tearing into these stocks that have had runs. And mind you, this one has had a run. Look at that weekly chart. We're just starting to turn over. I would say that, 376 right down here is your first level of support. I would say the second level of support is 344. That would be buying opportunity in my mind. Do not think that AI is not going to come up on this call pretty much every 30 seconds. You can go to earningshub.com and look at Microsoft. Let's do that, by the way. For everybody that sat through the ads, you're getting a bonus. Because we're going to go to Earnings Hub and we're going to look at the expectations for Microsoft right now. Let's go over here. Microsoft, you can see earnings per share, $2.82. Revenue, $60.788. You can look at the earnings this afternoon. Earnings last time, they beat 5%. What'd they do last time when the earnings came out? Let's take a look. Look at it. They were trading at about 400. So it's right where it was trading yesterday. Today, you're getting it at a discount. And what did they do? They beat it by 5%. Again, even if they make it, even, you're still trading at 406. You can read the AI summary right here. Positive, record quarter. Microsoft had a record quarter with Microsoft Cloud generating over $33 billion, a 24% increase. They're probably going to get another increase. Is it as big? I don't know. Azure continues to gain market share, particularly with its AI capabilities, and has over 53,000 customers, with a third being new to Azure in the past year, Activision acquisition. Now, negatives, new gap measures, forward-looking statements, Activision integration costs, security attacks, PC and advertising, gaming console market, operating expense, overall assessment. You can read all that in Earnings Hub. You can read all that. I am a big believer. I've read all this stuff. And I'm a big believer that Microsoft beats it out. Now, what do I think of Google? I didn't add to my Google. Last time they expected $1.51. The earnings per share brought down. Look at the revenue, brought down. And last time they beat it, and it's pretty much been brought down. So I like it. I like everything about this stuff. I think for the long term, I think you're setting yourself up. I think these companies lead. I think that the risks are always there. But I think you're fine. Grow your money. Okay. See you. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.